call the 26th meeting of the Standing Committee on Finance to order. Our orders today, Mr. Williams, we also have Mr. Miodrag Jovanovic, Senior Chief Saving and Investment Section. Welcome to you as well. Just remember, colleagues, you do have the motion, the initial motion adopted by this committee on June the 2nd. We also have the response from the Minister of August 31st, 2009. And we also have the measures in the budget of March of this year. And then, of course, this hearing is as a result of this committee's adoption of Mr. McCallum's motion following up on this issue. I understand our witnesses have a few brief opening comments. I don't have a statement from you, but Mr. Williams, do you have a brief opening statement?
Yes, thank you for extending the invitation. We will be pleased to answer any of your questions to the best of our abilities. I just thought before we began it might be worthwhile reviewing measures implemented in the last budget, which in large part address some of the concerns that were initially raised in the letter. But before doing so, I'd just like to provide some context around the underlying framework in which we developed this measure and the principles involved. The starting point for this is to consider the nature of an employee stock option, that the benefit it provides through its exercise is derived as a result of an individual's employment relationship. And in this context, we treat the employee stock option as an employment benefit. Any subsequent gain or loss in the value of the acquired security is treated as a capital gain or loss. The result of this is that an individual who acquires a security using employee stock options is in a comparable position in terms of the capital gains and losses on the security as someone who acquired it using after-tax income. Nevertheless, even though you have this comparability in the treatment of the security, employee stock options enjoy a preferred taxation relative to other employment income. Subject to general conditions, they're eligible for a 50% deduction on the value of the benefit. And in addition, the employee enjoys the advantage of being able to defer the underlying value, benefit value embodied in the option until the point of exercise of the option. It's important to realize that to also consider the potential value of this benefit. The average benefit realized through the exercise of an employee stock option exceeds $100,000. But perhaps more importantly, one can consider where the bulk of that benefit is realized. Over 75% of the value of these benefits are realized by individuals reporting income in excess of $500,000, and the benefit they realize on average is $800,000. So we're not dealing with what you might consider working class individuals when you're looking at the taxation of employee stock options. You also, I guess, given the value of these options, ensuring a fair tax treatment is understandably important. In the context of Budget 2010, special tax relief, elective tax relief measures were introduced that limited the value of the tax liability associated with the deferred stock option benefits to the proceeds realized from the disposition of the shares. This measure was implemented in recognition that many individuals may not have fully realized the implications of the tax deferral measure that was introduced in Budget 2000 and the potential financial liabilities that could arise. It was part of a package of measures that were implemented to ensure that similar situations did not arise in the future. That included the elimination of the deferral measure, and in addition, a clarification of existing withholding rules to ensure that employers put in place the systems necessary to remit the tax liabilities associated with the exercise of an option upon its exercise. So that concludes my remarks.
Okay, thank you very much, Mr. Williams. We'll start with members' questions with Mr. McCallum for 7 minutes, please.
Thank you very much. And I guess my first question is to ask you, I think you've seen the proposal that we put forward in our motion. Does the proposal in the budget, is it similar to what we said, or is it totally different, or what's the relationship between the two?
I think you need to distinguish between the result and the underlying principle. In one regard, it addresses many of the concerns that may have underlaid the motion that you introduced in ensuring that individuals who took advantage of the deferral measure were not financially disadvantaged as a result of doing so. I guess in another regard, it's quite different because it's consistent with the existing principle on which we tax employee stock options, whereas I think what you were proposing in your in the motion. Back up. Okay. I think what you were proposing in the motion was to provide a full offset so that an individual would be able to apply any capital loss on the security against employment income. And our concern with that is that it would provide an advantage to individuals who'd acquired shares through the exercise of options relative to the large population of other shareholders who had acquired their shares using after-tax income. So I guess in summary, my answer is yes and no.
Well, the budget says, and let me just quote part of it, an amount equal to half of the lesser of the stock option benefit and the capital loss on the option securities will be included in the taxpayer's income as a taxable capital gain. Mm-hmm. Is the effect of that not similar to what we proposed in our resolution?
Well, the mechanics of the measure are designed to ensure that an individual doesn't get a double benefit from the measure, because if you just simply went in and said, listen, the value of your liability is limited to what you realize on disposition, the individual would still have all the accumulated capital losses associated with the depreciation of those securities, and they'd be able to apply those capital losses over any future capital gains. So the way the budget mechanism works is it attributes a capital gain equal to the losses that you have incurred due to the depreciation of the stock, and thereby wiping out those losses, and then gives you the forgiveness. And I think the clause you're referring to is that mechanism by which we remove the accumulated capital losses associated with the security.
Okay, the reason I'm asking these questions is I'm a bit puzzled, since the effect of what we were proposing is at least similar to the effect of what's in the budget, and yet in the minister's letter he talks about how our proposal would compromise the integrity of the tax system and how it was counter to sound tax policy principles. And then he goes ahead and does something quite similar.
Well, I guess there's the distinction is that in the context of providing a general loss offset, and I think as the letter notes, on employee stock options, you would create a precedent within the tax system on a fairness basis to provide a similar ability to apply capital losses against other income for all shareholders. What we tried to do is implement a targeted measure which provided a practical solution to an understandable misunderstanding of the law that's occurred among some individuals, and at the same time as avoiding making a general pronouncement on the appropriate taxation of employee stock options. In this regard, it's worth noting that the measure is only limited to those individuals who took advantage of the deferral measure, and it's tied to the elimination of the deferral measure.
Okay, thank you very much.
Monsieur Carrier, s'il vous plaît.
Merci, Monsieur le Président.
Thank you, Mr. Chair. Good afternoon, Mr. Williams. I'd like to take the opportunity of your presence here before us to ask you about another issue which doesn't necessarily deal with the motion. That is the double deduction of the employer and the employee in the case of the sale of options. If we can eliminate the deduction for businesses, what would be the impact in terms of income for the government?
I can't recall the figure exactly, but I think the revenue impact was about $300 million a year. Is that maybe 270 the first year? So I could give you the exact number. We have it right here. If that.
Ce montant-là, c'est
That amount is the deduction both for the business as for the employees who exercise their options, because it's a double deduction. But if we only eliminated the part of the deduction for the businesses, that would amount to about $300 million in lost revenue for the government.
Taking a second to consider the design of the measure. The purpose of the under the previous system, where you had tandem stock option rights, through the use of these rights, you would result in a situation where the employee, by cashing in the option, would be still entitled to the 50% deduction, and the employer could fully deduct the cash payment. And in this sense, a certain portion of that payment escape taxation at either the corporate level or at the individual level. Okay, what we did is effectively require the employer and employee to choose who gets the deduction. Okay, so we eliminated one half of it. I think as a result of that, if the employee exercised the options, they would still be entitled to the 50% deduction. And in that case, the employer, by virtue of issuing shares rather than cash, would not receive the deduction they would have otherwise obtained. If the employee chose cash or continues to choose cash, generally speaking, unless an arrangement's, a mutual arrangement's established between the employee and the employer is fully taxed on that income as they would be on any other employment income, and the employer can fully deduct the amount. So you have a system where there's a choice involved. We can estimate the overall revenue impact of that, but the specific allocation of that revenue cost to either the employee or the employer will depend on the nature of the choice that's made. So we know we're getting our half, but we don't know from whom, if in simple terms.
OK. Donc, de la façon que vous le décrivez, c'est...
So the way you describe it is the employee has the first choice here in terms of having the deduction, and that if the employee doesn't take it, it's the employer that can benefit from that deduction.
That's a good summary, yeah.
Bon.
In fairness to him.
OK. Je vais me limiter à cette question-là.
Limit myself to that question. Thank you. I'm fine.
We'll go to Mr. Wallace, please.
Thank you, Mr. Chair, and I will not be taking the 7 minutes. I don't think we need to. I think we've resolved most of the issues that were highlighted, and I appreciate the Liberal opposition bringing it forward. I know we had people in my office to come talk to me about it, and I think based on, I know it's shocking, but working together on you guys bringing an issue forward and the minister moving on it and the staff bring it forward in C9. So I appreciate the change. Just so for my understanding, though, this is not just a go-forward measure. How will this affect those who are from JDS or Nortel who've been caught in this issue that they had, or is it just a go-forward measure?
Well, you have actually two questions there. and they both deserve separate answers.
Okay. I'll
Okay.
take them.
In terms of, it's available to all options, the employment benefit associated with any deferral since 2000. So in that regard, it's a go forward and a go backward measure. The second question is, how will it affect JDS and Nortel? Nortel options that where the employment benefit were deferred would generally benefit from this measure.
Okay.
In JDS wasn't a employee stock option plan; it was an employee share purchase plan.
Okay.
Okay. CRA has already looked after it through a remission order.
Okay. I appreciate that. And then just for my clarification, the deferral, it was the deferral piece that's caused us the issue. And is that, are we getting rid of the deferral option that's there for tax purposes?
That's right. The deferral has been eliminated.
Thank you. Those are my questions.
Thank you.
Thank you, Mr. Wallace. Mr. Mulcair, s'il vous plaît.
Monsieur le Président, je vais être aussi bref.
Mr. Chair, I'll be just as brief as my colleague, Mr. Wallace. First of all, I would like to thank Mr. Williams. Mr. Jovanovic, we have not yet heard you, but in any case, this basically represents you represent the best of the public service, and your presentation was extremely clear, and I believe the people who have listened to you, given such an arid issue that is taxation of stock options, I think people will have learned from your presentation, because in terms of educational approach, it was extraordinary. We've worked for 3 years with people from Nortel who were faced with an unpredictable situation. And as Mr. Wallace indicated, it is the work of this committee which brought those people to give their testimonies. The solutions were brought forward partly in the budget, and I'm quite satisfied with the collaborative approach that we've seen here in committee. Sometimes instruments that are marketed produce results that no one can predict, and that was such a case. And I'm quite satisfied with the results achieved. And once again, Mr. Chair, I find that the work done here by our presenters represents the best of Canada's public service.
Order. Thank you.
Thank you very much.
Ms. Hall Finley, please.
We're honored.
Thank you, Mr. Chair, and thank you, Mr. Mulcair. Just that was a moment. My colleague, Mr. Wallace, already asked the first question I had about it, the retroactive effect or not. But so thank you. But I also had another question. This is not in the budget implementation bill. Now, pretty much everything in, the kitchen sink is in the budget implementation bill. Do you have any idea why this is not?
I think just because of the technical nature of it and the timelines associated with the budget implementation bill, it wasn't possible to include a full legislative language in the bill. I think consistent with standard practice, we would be introducing subsequent bills to enact remaining budget proposals that are in the budget, and I would expect that it would be addressed at that time.
Given that we're almost at the end of our session and we'll see the budget implementation bill likely pass with everything and the kitchen sink in it, if this then will have to be delayed until the fall, for example, do you expect any negative consequences from that, or will it be covered off at that point?
I can't foresee any negative consequences associated with its delay.
Just because the timing will because of the first answer to Mr. Wallace, too?
Yeah.
Yeah, okay. Thank you.
Thank you, Ms. Hall Finley.
Thank you.
Thank you. Monsieur Dufour, s'il vous plaît.
Monsieur le Président, il me semble que je suis...
Mr. Chair, it seems I'm the only one who has questions this afternoon. First question for Mr. Williams. I'd be interested in knowing, in the U.S., with regard to stock options are treated like a capital gain, whereas in Canada, you have a deduction. Could you explain the differences in treatment between the two countries and the advantages and benefits that that might have?
Important to distinguish between statutory stock option plans and non-statutory plans because the treatment associated with the two is considerably different. The bulk of employee stock options in the States or the value is realized through non-statutory plans. In this case, they're taxed as any other employment benefit in that there is no capital gains treatment associated with it. They're taxed at full rates. Subject to certain conditions around withholding periods, the maximum value of the benefit and the maximum value of the benefit vesting, statutory plans will receive certain tax considerations, such as the ability to delay the taxation of the benefit until exercise. I think on an overall basis, the Canadian system provides a more competitive treatment in that we've put in place general conditions under which you can receive a 50% deduction on the value of the benefit.
Merci beaucoup. Je comprends.
Thank you. Now, I understand the principle with regard to stock options for employees. Of course, it's for the purpose of retaining highly qualified workers. But I have a difficult time. I see on page 385, table A153, when we talk about the distribution of stock options in 2007, and something that hit me was the average amounts. So first of all, in the chart, we have the average amounts. So when you look at the average amounts for a person who earns less than $100,000 and for someone who earns over $500,000, automatically it reduces the usefulness. I'm trying to understand perhaps what the median amount is, which is perhaps more interesting to know than the average amount. So would you have the median amount for ESOs? We unfortunately don't have that information, but we can provide that to you at a later date. Thank you. As well, with regard to a breakdown, when you come to incomes of over $500,000, you don't take into account people earning $1, $2, $3 million. And I'd be interested in knowing, because when you look at the chart, you see that those earning over $500,000 have shared 75% of the pie. So not only are these tax losses for the Government of Canada, and therefore for all citizens, but when you look at the 75% amount, I'd be interested in knowing someone who earned a total income of $1 million, how much those people earned in terms of the 75%, because the more you earn in income, the greater the share of the pie. And it's quite surprising to see that the way these stock options are crafted, it allowed only 7,000, close to 8,000 people to earn some $393,000, rather than those who earn between $100,000 and $500,000 earn much less. Wouldn't have been possible, perhaps, to have a more progressive share of stock options? Well, first of all, I think the issue that you raise is true, and that's what we raise in the chart. That is, the distribution is concentrated among the highest earners. And it's important to ensure that our position is a fair one between ensuring competition at the international level and the need to maintain a fair and equitable system. And that's what we try to achieve with this policy. But I don't quite see the fairness. Well, in any case, thank you.
a general question, and I do want to thank you and certainly second Mr. Mulcair said in terms of your explanation here today. I was approached after the budget was introduced, and there were some discussions back and forth, and it seems what some people want further to what was put in the budget was a further discussion in terms of what constitutes income of an employee and in terms of a further looking at how stock options are addressed. Are there any ongoing discussions within the department in terms of looking at sort of broadening what is employment income or looking at the stock option issue in a more general way?
There's no, we saw this as a package that addressed outstanding concerns associated with employee stock options. We're not aware at this time of larger issues associated with their tax treatment. I'm not, we generally take a comprehensive approach to taxing employment income where any benefit, whether in kind or in cash, is considered taxable. I think in a broad sense, the treatment of employee stock options is consistent with that approach.
Okay. Have you heard concerns from people saying that the changes that will happen here, that there still is perhaps a disadvantage with respect to some other countries in terms of trying to attract talent, especially to companies that, smaller companies that cannot provide a large income at that stage, but have to provide a lot of stock options to attract these people?
I think some people have expressed a different view about whether or not an employee stock option should be treated as an employment benefit. That is true, although I've tried to provide the rationale for the approach that we've taken in the budget and in general in the treatment. Does that address your question?
It does, yeah. Okay, thank you. No other questions?
I actually, do you mind if I have a follow-up response? Just in terms of the equity. One of the consequences of the elimination of the double deduction is that, like something like dividend income, you ensure that when you look at the taxation of options from both a corporate and an individual perspective, that they're taxed broadly comparably to how employment income would be taxed. So you have a situation where the benefit provided by the option does not provide a deduction to the employer, but the employee receives a 50% deduction. And in this sense, we see this measure as achieving a certain comparability in the treatment of options relative to other employment income, which is important given the substantially sort of the distribution of the benefits the measure provides. And we actually have a chart to that effect on page 354, which I think is interesting, just showing the taxation of employment income and its impact at the corporate level, and as well as its impact at the individual level. So you may find that interesting.
Okay, thank you. I want to thank both of you for being with us here today, and I do want to say, perhaps it's my bias as chair of this committee, but I think it shows some good work both by this committee and by the department in addressing a very real and serious issue for a lot of Canadians. So I want to thank you for being here today. I want to thank all members of the committee for their work. Thank you.
Oh, man. Whoa, drinks on the chair.